Hello and welcome to another episode of Market Pulse. Today, we will discuss the candle range theory model, a concept kept secret from the ICT trading community. Learning this trading plan could revolutionize the way you approach the market, a strategy that has the potential to skyrocket your win rates. In this episode, we're going beyond theory. We'll walk you through the candle range theory step by step, breaking down the key points and concepts that you need to master this advanced trading model. All you need to do is make sure that you don't skip any part of this video and watch carefully. If you enjoy learning advanced trading strategies and enhancing your trading skills, smash the like button and subscribe to our channel for more trading content. Before discussing the basics of candlestick CRTs, let's quickly examine the psychology behind the candle range theory. So, what is the candle range theory? The candle range theory states that every single candle represents a range. So, a candle in a higher time frame equals a range in a lower time frame. Since ranges can be swept, broken out, or retested in the market, all of these actions can also emerge in candlestick patterns. Every candle has a high and a low, which means that on the lower time frame, a range is formed between the candle's highest and lowest points. As you know, the market movement consists of three major phases, and price always circles among them: accumulation, manipulation, and distribution. Imagine it as a continuous circle in which the price moves from the accumulation phase to the manipulation phase, then from the manipulation phase to the distribution phase, and then from the distribution to the accumulation phase regularly. This is the primary movement pattern that the market always follows. It is called the power of three. Now, let's proceed to the next topic and discuss how to identify a CRT pattern in terms of candlestick patterns. Then, we can see the various scenarios we might encounter in identifying candlestick-based CRT on the chart. In the bullish scenario, the candlestick-based CRT typically refers to a three-candle sequence on the higher time frame, like 1 hour or upper, that the first candle forms a range by its high and low. The second candle takes out the liquidity of the first candle by forming a wick, and then the third candle break out the range. Please note that CRT model is not usually formed by a three-candle sequence, and it is not restricted to three-candle and can be formed by multiple candles series. There is no important difference between the candle model CRT and the CRT model with multiple candles. Just the three-candle sequence CRT forms in a shorter period. For example, in this candle series, we can see that multiple candles are formed to hit the range candle's highest point. So, price formed a range candle followed by an inside bar. Then we have a sweeping candle that swept below the range with a shadow. And then price formed multiple candles until it touched the high of the candle range. These concepts also apply to bearish markets. These principles can be applied across various time frames and any price action-based chart. To solidify what we have learned so far, let's examine more examples of candlestick-based CRT models that we might encounter in the market. Here we have some CRT models that price is more likely to form them in the market. Starting from the top, the first scenario is the most critical CRT model that provides a high probability of success since we have the accumulation, manipulation, and distribution phase inside the three-sequence candle, power of the three in three candles. Let's say we have a perfect sell-side liquidity pool just beneath this bullish candle, and what happened next here is that price pushed upward and entered into the accumulation phase. Price is manipulated by taking out the high of the range, and then what happens is that price has entered into the distribution phase, indicating that price will continue toward the sell-side liquidity. We will have a continuation to the downside. So here, we already had accumulation, manipulation, and distribution, a power of three. Next, we have a range candle followed by a bullish green candle, which is taken out below the range, and then we have multiple candles until the price closed above the range. Next, once again, a range is formed. Liquidity was removed, then the price was pushed higher, finally touching the range's high. It's the same scenario over here. A range candle formed, but it took some time for the price to take out the range candle's low. Then, immediately, the price changed its direction toward the range's high and closed above it. And the rest are the same as the examples that just explained. CRT is basically an objective and mechanical way to simplify your trading by suggesting simple steps, fixed objectives, and rules, and also by minimizing the terms and conditions that you need to look for to execute a high-probability trade. Now, let's see what criteria and rules we need to consider in order to identify high-probability CRTs. Firstly, we need to look for the CRT around key levels, so the higher time frame candles should be identified around the key areas. Second, they should be identified around the key times. For having a high probability CRTs, here are the key times that must be considered. For forex market, we should consider the candles formed at 1 a.m., 5 a.m., and 9 a.m., 1 p.m., 5 p.m., and 9 p.m. If your identified CRT range is on the monthly time frame, then for entry, you should use the daily time frame. If your CRT comes from the daily chart, you should execute your trade in the 1-hour time frame. If your identified CRT is on the 4-hour time frame, then entries must come from the 15-minute time frame. If your CRT is on the 1-hour frame, then you can use a 5-minute or 1-minute time frame for your entry. If you use the 15-minute time frame to identify CRTs, then you should use 1 minute to place a sell or buy position. Now, let's see how we can use the CRT model to our advantage and explore how to execute trades in the market based on it. Here, we have the Euro-Dollar 1-hour time frame on the screen. As you can see, we have a perfect CRT model based on this 1-hour 9 a.m. candle range. We have all 3 steps of the power of 3: accumulation, manipulation, and distribution. After forming this large candle as CRT's range candle, we can see that the price swept the liquidity accumulated below the first candle with a wick, then closed inside the range. After that, the price was immediately pushed to the high of the candle range. Let's see, if we were behind the screen and monitoring the market, how could we enter the market with this CRT model? After identifying our range candle and drawing the high and the low of the range candle as the candle range high and candle range low, we need to zoom into the 15-minute time frame to gain a clearer view of price action and also to monitor the candlestick better. In the next step, we should wait for the 9 a.m. and monitor the price action in this specific time. As you can see, price pushed lower and has taken below of the range candle with 9 a.m. candle, and after sweeping the liquidity and after conducting the manipulation phase pushed upside and closed inside the range with this bullish candle. So, we have a confirmed CRT model formed during a key time. Hence, we know that the price is going to move higher and touch the highest point of the range candle. So we are looking for an opportunity to go long that we need to zoom into the 5-minute time frame or 1-minute time frame to place an entry. To do that, I am going to zoom into the 5-minute time frame and place my entry at the highest point of this order block and also put my stop loss couple pip below the area. And for setting the take profit, we have 2 options. We can aim for the equilibrium or midpoint of the range candle, or if you seek for a more risky trade with a higher reward to risk ratio, you can aim for the high of the candle range. As you can see, after mitigating the 5-minute order block, the price pushed higher and eventually touched the candle range's high, providing a perfect CRT model entry.